Hello, this is Amy Schreiber, MCOL Content Manager, and I'd like to welcome our listeners to today's podcast session. We are pleased to have Doug Sherlock, Senior Healthcare Analyst for Sherlock Company, joining us today. Doug is here to give us his quarterly insights into financial markets of health plans.
Thanks, Amy. In this broadcast, we'll review the performance of the managed care industry for the first quarter of 2020 and year-to-date 2020. We'll also discuss sector valuation indicators and operating trends. First, I want to speak to stock prices and valuation. As of May 8, stock prices for the publicly traded health plans are up by an average of 0.2% since the beginning of the year. This compares to the 9.3% decrease in the broader market measured by the S&P 500. Health plan sector market capitalization decreased, however, by 4.7% year-to-date since the decline skewed towards the larger plans. On January 23, Centene announced that it had completed its acquisition of WellCare. For comparison purposes, our universe is comprised of 7 publicly traded companies. Stock prices for 4 of the 7 plans lost ground so far this year, led by Triple S at 17%, followed by Anthem at 9.2%, Cigna at 7.4%. United Health fell by 2.4%. Molina, however, increased by 29.4%. Centene and Humana gained by 4.8% and 3.0% respectively. Here you can see an additional facet of the relative performance of the plans. While those focused on the commercial market were weak, the plans focused on Medicare and Medicaid appreciated. Valuation metrics were mixed since the beginning of the year, with price to trailing 12 months earnings increasing by 8.2% to 17 times, and price to projected 2020 earnings lower by 9.6% to 13.3 times. Price to operating earnings increased by 10.2% to 18.8 times, and price to sales fell by 0.8% to 0.7 times. Price per member increased by 0.5% to $3,100, and price per risk member fell by 1.2% to $5,200. All rates of change are calculated holding constant the universe of health plans in both periods. Since our podcast in March, the average health plan stock prices are higher by 1.8%, with health plan market capitalization decreasing by 0.8%. The S&P 500 fell by 6.4% since March. Health plan valuation metrics all trended higher, with price to operating earnings and price to trailing 12-month earnings increasing by 10.3% and 9% respectively. On to our review of operating trends. For the first quarter of 2020, combined ASO and risk membership increased by an average of 5%, while increasing by 4% in total to 135 million. By average growth, I mean the average of each health plan's growth rate. Total reflects the change in combined membership of the plans as a whole. Fully insured risk membership increased by an average of 8% and in total by 6% to 75 million. Medicaid plans experienced an average increase of 18% and a total growth of 27% to 19 million members. Commercial plans reported an average gain of 4%, increasing to a total of 56 million members. Centene reported the largest increase at 35% due to the acquisition of WellCare. The proportion of total members served under self-funded ASO arrangements fell by 1.7 percentage points to 44.7%. On average, the plans posted a 1% decrease. ASO members were up in total by 0.2% to 60 million. Revenues for all plans increased by an average of 17% and in total by 16% to $153 billion. Medicaid plans reported $31 billion in revenues, an average increase of 26% and a total increase of 36%. Centene posted the largest gains in revenues for Medicaid plans by 41%, again in large part attributable to its acquisition of WellCare. Commercial plans increased by an average of 13% and in total by 12% to $123 billion. Anthem posted the largest increase to revenues of 21% to $30 billion. Premium rates for all plans grew by an average of 9%. Medicaid plans and commercial plans experienced an average premium growth of 7% and 9% respectively. Operating earnings for the fourth quarter of $9 billion reflects a total increase of 6% and an average increase of 0.5%. Medicaid plans reported operating earnings of $505 million, an average and a total decrease of 32%. Commercial plans gained ground to $8.5 billion in operating earnings, an average increase of 14%, and a total increase of 12%. Humana had the largest percentage gain of 48% in operating earnings to $687 million. Average operating margins for all plans decreased by 0.7 percentage points to 5.9%. Medicaid plans posted a 1.7 percentage point decline to 3.2%. Commercial plans margin was flat at 6.9%. The health benefit ratios for all plans were flat at 81.8%, but the average health benefit ratio for Medicaid plans increased by 1.7 percentage points to 81.8%. Commercial plans, however, had a 0.7 percentage point decrease in health benefit ratio to 81.8%. The administrative expense ratio grew by 1.6 percentage points to 12.4%. Medicaid plans reported an average increase of 0.1 percentage point to 15.2%, while commercial plans experienced a 2.2 percentage point increase to 11.3%. The health insurance provider fee has resumed, and for every plan whose members are subject to it, including the public companies, will increase to $15.5 billion for 2020. We estimate this cost to be a little over $10 per member per month, which is very significant when you consider that administrative costs for many commercial products are $45 per member per month. Non-operating earnings fell by $879 million. Our calculation of non-operating income is the sum of investment earnings, income earned in non-health lines of business, less interest expenses. Medicaid plans reported non-operating losses of $49 million compared to a gain in the prior year's quarter of $9 million. Commercial plans also experienced a decrease of $821 million to only $34 million. All of these non-operating earnings values exclude SSS. Net earnings for the first quarter were lower for the plans, decreasing by an average of 42% and in total by 10% to $6.6 billion. Medicaid plans had net earnings of $249 million, a total decrease of 65.2% and an average decrease of 48.2%. Commercial plans generated $6.4 billion in net earnings, a total decrease of 3.6%, and an average decrease of 40%. Cigna had the largest percentage change in net earnings of 14% from $1.4 billion to $1.2 billion. This was primarily due to a $424 million decrease in non-operating income. I want to close by touching on a key environmental factor. As I mentioned earlier, the knock-on effects of the coronavirus are central to the financial performance and stock prices of these organizations. To reduce COVID-19 contagion, state and local governments have imposed business and other lockdowns. This has led to more than 33 million in new jobless claims from the third week in March through the first week in May. While state-mandated grace periods for premium payment and government financial assistance may mute the effect of job loss on enrollment in commercial products, an intermediate term impact can be anticipated. While only 2 weeks of adaptation are reflected in the first quarter of 2020, effects have already been recorded. Note that as state and local governments have discouraged elective health procedures, the health benefit ratios for commercial plans declined by 1 percentage point. Administrative expenses have increased. The resumption of the annual fee on health insurers is at this point probably the predominant explanation, though. But based on our work with health plans, operating leverage in administrative expenses is commonplace and powerful over the short term, though it is too early to conclude this is a factor. But it can be if plans do not adapt. We think that health plans will experience significant changes in both scale and product mix in the coming year. Medicare and Medicaid will become increasingly important as commercial declines. The insured segment of commercial, with its concentration of small groups, will have a high share of those declines. To adapt will require that costs decline with membership and that their mix of costs change as well. Sales and marketing expenses are less important to the products we expect to increase in prominence, the various government products, but medical management activities tend to be more important. The Sherlock benchmarks might provide you with the insights that you need to achieve optimal costs in this volatile environment. If you're interested in any of our universes, please reach out to me. Those universes are Blue Cross Blue Shield plans, independent provider sponsored plans, Medicare plans, and Medicaid plans. In terms of timing, note that we will begin publishing the results for the Blue and IPS plans in the next month or so. I hope that you will reach out to us if you would like to consider licensing. We are continuing to develop the panel for the Medicare and Medicaid plans. Please contact us if you have a plurality of your members in any of these products. As always, you can get a transcript of these remarks through MCOL or Sherlock Company. We look forward to hearing from you. This is Doug Sherlock of Sherlock Company.
You've been listening to Doug Sherlock share his quarterly insights into the financial markets of health plans.